Right now, someone with $400 in their bank account is sitting at a desk getting hit with a $35 overdraft fee. And 3 miles away, someone with $400,000 at the same bank is getting a call from their personal banker. Checking in, no hold music, first name basis. Same bank, completely different institution. There are 8 tiers inside every major US bank. Most people never learn they exist. This video is the full map, exactly how the system works and the precise moment it flips from working against you to working for you. Your account is negative. Maybe by $4, maybe by $400. The number almost doesn't matter. The mechanism doesn't scale with severity. It simply activates. The overdraft fee hits within hours, $35 at most banks. If 3 small charges process while you're negative, that's $105 in fees on top of whatever deficit you're already carrying. The math is almost elegant in how precisely it punishes the wrong person. If you had money, you wouldn't be overdrawn. But you don't, so now you have less. You try your debit card at the gas station. Declines. There's a line behind you. You're doing arithmetic you can't finish fast enough. The card is still declining, and everyone is watching. That's what financial stress actually feels like. Not dramatic, not cinematic, just that. Banks collected over $7 billion in overdraft fees in a single recent year, mostly from the same small group of accounts, paying repeatedly for the privilege of being poor. You are not a customer at this level. You are a cost the bank is trying to recover. You've pulled back from negative. You have $200, sometimes $400. The bank services you, but does not value you. The monthly maintenance fee arrives, $12 or $15 auto-withdrawn, because your average daily balance didn't meet the minimum. If you had $1,500 sitting untouched, the fee disappears, but you don't, so it stays. You are paying for the account that's supposed to hold your money. You can apply for a secured card, deposit your own money as collateral, bank lends it back, charges you interest. It sounds absurd. It's also how credit gets built from zero. I was at level 2 for almost 3 years. $144 a year in maintenance fees just to keep my own money somewhere. The secured card felt humiliating, but I used it for 14 months, paid it in full every single month, and watched my score move from 580 to 661. That one number opened level 3. What level were you at when you finally felt like the bank was actually on your side? And what changed it? Tell me in the comments. Here's the thing most people miss. There is a specific moment, somewhere between level 3 and level 4, where this system stops working against you and starts working for you. It happens quietly. It happens fast. And if you don't know what to look for, you'll walk right past it. That moment is coming up. Your direct deposit is $3,200 a month, every 2 weeks, without fail. The bank doesn't call to congratulate you, it notices algorithmically and quietly moves you into a different category. The credit card offers arrive. Real ones. $2,000 to $3,500 limits. Monthly fees disappear because your direct deposit qualifies for a waiver. A $5,000 personal loan gets approved in 48 hours at 11%. You are a customer now. That sounds unremarkable. After levels 1 and 2, it genuinely isn't. But here's what nobody tells you about level 3. The bank is watching. On-time payments, months without overdrafts, dollars that stay in your account a little longer, it's all feeding a risk model that determines what you get access to next. You're not just banking, you're building a file. Most people stall here for years without realizing it. Not because they're doing anything wrong, but because nobody told them that the file scores 3 things above everything else: payment history, credit utilization, and how long the accounts have been open. What level are you at right now? If it's level 3, the single move that accelerates the jump to level 4 is in the description. It's the one most people skip. Savings at $18,000. Investments at $22,000. Credit card paid in full every month. The 24% rate is irrelevant when you never carry a balance. The credit limit increases start happening without you asking. $4,000 becomes $9,500, becomes $14,000. The bank extends you more rope because your history shows you don't need it. Car loan this time, 6.8% instead of 11%. Not because they like you more, because your profile has shifted the risk calculation. The price of money is lower for you now, and that gap compounds. Better rates mean more capital stays in your hands. More capital builds faster than less capital does. This is the moment. The same system that charged you $35 for being $4 negative is now quietly lowering your cost of living through rates, through limits, through access. It doesn't announce itself. It doesn't send a letter. It just starts tilting. And once it tilts, it keeps tilting. We're halfway through, and this is where it gets uncomfortable. The next 4 levels aren't about discipline or savings rates anymore. They're about access. And the gap between level 4 and level 8 is so large it barely feels like the same financial system. Keep watching. Combined assets north of $150,000. A priority phone queue. Shorter hold times, more senior reps, more authority to waive fees and make exceptions without escalating. A named banker gets assigned. Someone who calls to check in, who knows your account, who can solve problems in a single conversation without putting you on hold for 40 minutes. The motivation is retention. The access is real. Pre-approved mortgage products, premium cards with real rewards, investment offerings. The institution is now competing for your future business. Here's the uncomfortable part. Every year below level 5, you are paying an unannounced premium. In fees absorbed, rates accepted, time wasted on hold. The cost is real. It just doesn't arrive as a line item. The way out is the same file you started building at level 3. For the first time, the bank has more to lose from this relationship than you do. Up to this point, the differences between levels have been degrees. More access, better rates, shorter hold times. What comes next is a different category entirely. $500,000 to $1 million in investable assets. The bank stops being a place you visit and becomes a service that comes to you. Wealth management, planning, tax coordination, estate guidance, one relationship. Quality varies. Some advisors are exceptional. Some are expensive salespeople in very good suits who've learned to ask questions before they pitch. You learn to tell the difference fast because a 1% rate difference on a $300,000 portfolio is $3,000 a year, every year. The conversations change texture. You are no longer being sold products, you are being consulted. When something goes wrong, a wire transfer, a frozen account, it's resolved in the same call. No scripts, no hold music. Compare that to level 2. A scripted rep who flags your issue, escalates it to someone you'll never speak to, and sends you an email in 3 to 5 business days. Same bank, different rules. You are an asset now, not a customer, an asset. Above $5 million, the bank offers things that aren't on the website, rates not posted anywhere, investments that require accredited investor status, or minimum commitments most people never reach. Your mortgage rate is meaningfully lower than level 3, enough over 30 years to amount to tens of thousands of dollars. Not because you negotiated harder. At your profile, you are a near zero risk borrower. The bank wants that loan on their books. You are doing them a favor by borrowing. The retail banking rules still technically apply, but every degree of internal discretion is exercised entirely in your favor. The rules are the same. The application is entirely different. Private banking is not better wealth management. It's a different product. The way a charter flight is different from first class. Both get you there. The experience is not comparable. Your private banker manages fewer than 20 relationships. Their entire professional focus is those 20 people. They know your children's names. They know what you're building and what you're protecting. Rates are negotiated, minimums are waived, and documentation that takes a retail customer 2 weeks is done in 48 hours. The system that was automated and indifferent at level 1 is now human, attentive, and oriented toward yes. You are not a client. You are a relationship, a named line item in someone's performance review. Losing you would matter to people whose careers depend on not losing you. That is a different kind of power than anything else in this video. Which level are you at right now? And which level are you building toward? Tell me in the comments. I read through every one. The description has the one move most people at level 3 skip, and a breakdown of the exact threshold between level 4 and level 5. Both free. That's the Ben Factor.